Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
All right, yes, we have on Friday, February 19th, we have lots of red folders. A lot of this happened during the night, 2 o'clock in the morning, British, Euro, this is all the European stuff, pretty much till 4:30. So most of all that is behind us. Now just a matter for the markets to stabilize after those reports. And now we're sitting here right between 8:30, 8 o'clock. There's nothing much, pretty much for the rest of the day. So I think most of the news is behind us. Now it's just a matter of seeing how the news reacts to the different currency pairs and then what we're going to do about it. So
Colin put in the question, guys, there's only 2 of us so far in the room, just so not in the room, but as panelists. So if you would please use your Q&A section today instead of the chat box. It'll be easier for me to help Al keep organized. But Colin put in the Q&A area, most pound pairs seem to be heading down on the 15-minute as it looks like moneymaker cycle has ended. So if you want to look at the pound Kiwi, pound CAD, or pound Aussie, he's saying they clearly show an M formation. So if you want to take a look at one of those, that would be kind of cool.
Let's see what we're going to do here. We're going to take a look at our heat map a little bit and let's see which. This is our on the upper left hand is the 1 hour chart. This is the 30-minute chart. This is the 15, and then here's the 5-minute. These are all the 8 major currency pairs on 4 different time frames.
Aussie Kiwi strong on all of them.
Aussie Kiwi strong on all of them. So if we get any Aussie Kiwi alerts, more than likely we're going to be trading in the favor of their strength. Right now we're looking at the U.S. dollar is the weakest of all 4 currencies. So we can be looking at any U.S. pairs, or we can looking to go to the weakness of the dollar. So that seems to be pretty much the trend here lately in the morning when we get started. It starts picking up a little steam after around 9 o'clock time frame, just before the U.S. market opens up. It seems like the Europeans seem to drive the strength of the dollar down, and right now we're seeing that the Asian pairs seem to be the strongest of the bunch right now. The CAD is 3rd in line, so as we get closer to the 9 o'clock hour, you'll probably start looking at the Canadian dollar being a little bit stronger. And again, if we're to get a alert for like the U.S. CAD, we're going to be looking to trade it mostly in the strength of the Canadian dollar. So dollar weakness, everything else is a little bit stronger. Best strongest are the Aussie and Kiwi. So we'll keep that handy here so we can take a look at it. And there's a CAD yen. There's the last one.
CAD yen was running up against resistance. So
okay, so nothing there. And
the other one's over an hour old.
What was the other one that we're going to take?
We were talking about the pound.
Colin
brought up the pound Aussie, pound Kiwi.
Okay, let's just take
pound CAD. Either ones. He's saying they're forming on a 15-minute chart. He's seeing M patterns. Yeah, okay. Yeah,
this one kind of just broke right down there. Let's see. That's M15. Okay, make sure I'm on the 15-minute charts and all these.
You are.
Yep. And this is looking. It's trying to see what kind of strength and weakness we have.
It's funny how it hesitated right where you said the fibs were. It still broke through.
Yeah, it broke
but
through.
That 100 mark on the fib, it did hesitate for a bit.
Let's see if we can. That's as far as it's going to go. Basically, we have 2 zones up top. We have 2 zones on the bottom. Actually, 3 zones, I guess, if you want to count this other one here. So it does have a little bit more to the strength, but it's not over. I wouldn't call it to be overly strong. It seems to be more range bound right now. I'm going to take these fibs off of this one just because it's cluttering up my screen here. I don't really need the fib that I had. It actually came down. It broke. It came right down to this. Actually came.
38.
Actually, we drew this pretty much with the range. This is where the range was, and just broke way to the upside. It pulled back a little bit, but it just pulled right on up. So we're going to take this off because it doesn't. All it's doing is cluttering our screen here. So I come over here and see if I can find my fib line. This one. I'm going to delete that. I'm gonna move these over to the 8 o'clock hour. I put this on to the 19th. Put this one on to the 19th.
Definitely taking heat on Gearbox today.
Are we? I haven't even looked at
Aussie Swiss. Aussie Swiss's parabolic moves up. It is what it is.
And so zone in here a little bit. So anyway, there's no trade here. This is our contra trend trade zone between 8 and 10 o'clock East Coast time. We're coming up on that. Another 25 minutes will be in that zone. If we get a bounce, we could possibly get a bounce over that and start going in the upper direction to see what kind of a bounce we may get. Again, we'd be looking at strength of the Aussie and Kiwi. So right now, that's pretty much showing where the British Aussie, the Aussie is showing the strength because this thing's going short, coming right into the zone. But this could be near the end of that that move right now on that 15-minute chart.
Can you take a look at that pound CAD? I think that would be a great picture of what Colin was talking about.
Okay. Here's the pound CAD.
Yeah.
It's almost like it
back,
almost seems
back
like
it out a little bit. Back it out
like
and squish it. Squish the bottom there, Al. Squish the bottom.
Squish. There's squish. Okay, we could tell we're definitely in an uptrend.
Yeah, we were talking about that. He was talking about the M pattern.
Oh yeah. This looks like a nice little M pattern. Here's this move up. Here's the left hump of the M. Here's the middle of the M, the right shoulder of the M, and it's coming down to retest this zone right here. So we're going to take a. This one could get interesting. Up arrow right on this zone. That's the zone where it is right now. We'll see if this zone gets taken out. And this is the British CAD. The British is weak to the CAD. So it would be to the strength to the downside. That seems to fit. Let's move this out a bit. It's positive. That's almost like a classic M pattern right there. Pulls up, shoulder, pulled back out, came back up, retest the shoulder. You have a little bit of a slope from the first high. It's a little downward sloping trend. Not a lot, but it came back up. Basically what it did is it came up, made the zone, came out, retested the zone. This is almost like a classic money market move. Came out, bounce, arrow. Here's the next zone to a go. And we kind of were sleeping. I was sleeping during this time, but if you look at, oops, missed that. If you look at where that arrow is, here would be the entry right off of this candle right next to it, coming on down as a 43 pip move. That was a perfect, that was almost like a classic. From the A pattern, it still has some strength to the downside. Now we may get a couple with the M. Remember, we have the M, and then we have an A, another A pattern, and then it starts forming another W. So here's the first A pattern right here. You see this? There's a pullback, came back down, formed our A, coming on down. Now, once you'll probably get a bounce, so we may get another A pattern. I'm going to be looking for a pattern that's going to maybe come in like this. This would be the second A. This is a projection. This is not what's happened yet. And then we'd be looking at down here where we have to the left, you can see where we have the W where it came down, formed a bottom, came back up, formed the middle of the W, came back, retested it, bounce, there's the middle of the W, back arrow, go all the way up to made this zone. So this is and this was yesterday's move on this. This is the overnight session. And let's see where we have here from the whole session. If you look at like for bank induction, or not bank induction, when the Asian session opens up, one of the strategies is that we take it from the bodies of the candle from the new daybreak, which is right here. That's the low of the lower of the body. And then here's the before the money zone. Here's the upper body. And if this zone is less than 50 pips, when it breaks out of the top or breaks out of the bottom of these two orange lines, that would be your trade. Now the question is, do we have more than 50 pips in between here? And let's see, we're going.
Where do you think the beginning of that M started?
The beginning of the M, I would say it started I would probably have to go with start. The actual start was probably right here when it left this zone.
So isn't there a theory if we measure from the start of that zone to the top of the M, the distance it will go will be from the bottom of the pivot M? So if you measured from the top to the start,
From the top of this to the
yep,
start,
to
from
the
here
start
to
of what you
here,
believe, yeah,
with
measure
the
that off.
Fibonacci.
Just it could be measurement of pips for all I care.
Actually, this could be this is almost like a classic Fibonacci retracement extension, where it came up. Here's your strong move up. Here it came down, crossed over your moving averages, came down, came into the 62 to the 79% zone. Had a strong move down, strong move back up. This is your kind of like your railroad track. It comes back up and retests the top. Now, it didn't quite make the top of this, but it did hit the zone.
Measure from your 0 to your 100 in distance.
0 to the 100, the distance.
Yep.
81 pips.
Now take from your 0 or your 100 and go 81 pips down.
Oh, I see. Okay. Well, it's going to be from.
It wouldn't be from the top. It would be from the bottom where it started.
I go 81. Oh, 81 pips to the downside, like here.
Yep. And look where it goes.
Yeah, almost to the pip. So basically, this was your classic based rally. Now we're doing the retest, and if this thing breaks, it's probably going to come down and retest at the bottom here. And right now we have a lot of. I mean, right now we don't know if it's going to break through that or not. But if we may get the secondary arrow. Now we can go with a 5-minute chart. If we have one arrow, if we get the second arrow, then we can. They say you can also. That's where you go to the multi-time frame. You can take this to a 5-minute chart, and see where the. Now we didn't. Here's the second arrow on the 5-minute chart. We didn't get it on the 15-minute yet. This is right where all the. And right now this is the low of
the day. Yeah.
Of the day for the money zone. But you can see where this was the overnight low before we came to the money zone. This orange line. Let me take this Fibonacci off because it's.
And where's your 200 in this? You don't have your 200 on this one?
Yeah, I'll put it on here and just let me find this.
Because Garvin just mentioned the pound Aussie close under the 200. I'm guessing it's probably the same for the CAD.
Template to the template load. And I've got my 200 moving average right here.
Yeah, we have close under that too.
Yeah, we have the close under this.
Now you have on a 5-minute, you did have a recalibration, so you have a zone now.
On the 5 minute,
that looks like the 15-minute chart. It shows 5 minutes. Click on your 15 for a second. I wonder if the click on that.
Looks like we just gave them a couple alerts that came through here.
Yeah, well, let's do those too. We'll come back and look at the pounds.
Let's check this one out first before it gets too far out of the way here. British, Swiss, pound Swiss. Well, let's take a look at that one. Oops.
Yeah.
Wrong chart.
Pound CAD is crazy.
Pound
crazy
Swiss,
drop.
pound Swiss.
And those who were in our trade yesterday for the U.S. CAD as well, we talked about that. We were talking about yesterday that looked better for a swing. It did turn out for a nice swing trade, but it was not for the 15-minute chart. I don't know how many of you guys saw that, but I was short, set it up for a 15-minute 40 pip stop. If I would have done a swing on it, we would still be in there. Yeah, no trade here for sure.
Yeah, you can tell it's relatively narrow sideways range.
Yep. Take a look at that pound US while I'm sure are we going to did we have any more alerts?
We had a gold, 5-minute gold. I guess we could take a look at that one.
Take a look at it.
I think I still have these.
And then we have Yoda wanting to look at US 500. I think you have the US 500 up, don't you?
There's the US 500. Let's get the gold first.
Yeah.
And do this one.
That was just potential there.
Let's right up into the zone. I see nothing there. I see,
and it's sideways too.
And it's sideways.
Look how flat your moving average is.
Yeah, nothing there.
Go ahead and squish that up for a second, Al. I want to do real quickly.
Squish it up.
Yep.
Squish it or unsquish it.
Squish that bottom. Okay. Looking at it,
Definitely in a downtrend.
downtrend but it's sideways currently with a downtrend. It's waiting for things to catch up probably, but that doesn't mean it's going to stay there very much longer.
We're going to put this on the templates. Load.
See where that 200's at?
My 200 moving
I bet
average.
you. Wait, I bet you it's trying to catch up. Yeah, there it is.
It's right here.
I would definitely be, if anything, I would be a seller, but I'm not even anxious about that because both of them are flat.
Yeah,
both flat for day trading. Now,
Yeah.
if you're looking for a long term, that's totally different.
Remember, today's Friday. A lot of the profit taking has already been done or has been. I mean, there's always, not always, but a lot of times there's still good trades on Friday. But if you've made your profit for the week, don't be in a hurry to give it all back.
Because you can on Friday.
Because you work real hard all week long trying to get those percentages up and get profitable. And then you just say, I'm going to take one more trade. Next thing you know, that last trade on Friday, you just gave it all back to the dealer. And then you say, why did I do that? Why didn't I just take the day off? Let's see. Let's take a look at we looked at the Swiss yen.
You want to look at the 500? Do you have the 500?
Oh, the 500. Yeah, that was the other one we were looking at.
I didn't know if you had that 500.
I do have it. If I can just scroll down here and find my. Let's see. I gotta find the right button here. There we go. There's the US. Ooh, look at this. It looks trying to get back up again. This doesn't want to give up the rally there. So let's see here. We have a bounce, no arrow. Here's the range. Let's see where we're at here. We're looking for a $5 target to a $10 stop. And this is at the let's see, 39.3550 is would be our target area to the upside, and we're at 39.27. So right now, if we had an arrow right now, we could take that trade. We'd have our 5 pips to the. Actually, we'd have 8 pips to the $8 to the target. $10. See that this would be at this one here. We don't have an arrow yet. We did have a bounce, but we don't have the arrow yet. We have the moving averages are in the right direction going to the upside. We have strength to the bottom. Just take it from the open of this candle right here. We'll just take it to the open of that, which it looks like it's going to be actually that little gap there. So $10 would be from 27 to 17. Stop would be right around the purple line, a little bit above the purple line, and the target would be up here to the 35. So again, it's not really a designated trade, although there is enough room. There is momentum to the upside. When the dollar is weak, the stock market seems to get stronger.
Mm-hmm.
And you might ask the question, why is that? Anybody have an answer for that?
Let's see what we got here in the chat box. Anybody got an answer?
I have a theory.
Nobody's responding on that question, Al. So go ahead and throw your theory out there.
My theory is that when the dollar is weak, that means our exports are cheaper. Our exports are cheaper, then our manufactured goods get to be sold more worldwide because they're sold at a cheaper price. When the dollar goes up, our our exports become more expensive for people in Europe or Asia, and so that's causes our overall markets to consolidate. That's my theory. I don't know if that's true or not, but that's just the way I kind of think about it. But usually when the dollar is weak, the stocks go up. When the dollar is strong, the stocks come down. With all the printing that we're doing in the U.S., it's basically devaluing the dollar, which in theory should make the dollar more worth less, which should cause and that's probably one reason why it's the market's going back up. Plus, they keep pumping money into the stock market. When they keep printing money, that keeps the banks get the money. They buy stocks. They drive the prices up. People put the money that they get into the stocks because they have no place else to go. And that's just part of my theory. I don't know if it's true or not, but that's the way I kind of think things through. And let's see, what else do we have here? Any questions? This is kind of open mic, open line Friday. Just ask away. Same place the British is the UK 100 Stocks Exchange. Yeah. I thank you, Gavin, for supporting my theory.
Makes us feel good, doesn't it?
I'm not a market guru. I don't know the fundamentals of the market, so I just try to let the charts tell me what's out there, what's happening, and usually if I work on the theory, the charts tell me the news before the news tells me the news.
In most cases, that's true. In most cases, that's true for sure.
And let's see, nothing's changed on our heat map. Well, why don't you sing us a song while we're waiting here, Brian?
What was that now? I'm not singing this a song.
Why don't you sing us a song while we're waiting here?
It's not happening today.
Yeah, let's see how are we doing. See if anybody else, any of our other participants are waiting to come back over here. Our panelists. Let's see. It looks like some of our panelists are taking seems like our panelists are taking an early weekend.
Yeah.
Which I can't say that I blame them. They work hard all week long. Any other questions while we're waiting around? Let's see. While we're waiting, I haven't checked my gearbox yet. Let me see how my gearbox is doing. I'll either be surprised or happy, one of the two. Let's see. No, not that one. Get my VPS up here.
I'm trying to find the window again.
Here we go. There is how to see how my gearbox. Well, my gearbox isn't doing. It's not doing great this week, but it's. I mean, I draw down $20 on a $4,700 account.
Well, I'm just over
trades.
I'm just over 5% on mine
for the week.
Yeah, for drawdown.
Oh, for drawdown. I was saying for
I'm
for
up.
I said, "Wow, how'd you do that?"
Well, close to 1.75 for profit, but I don't expect to go much over that this week. Kevin said hello, by the way.
Oh, hello, Kevin. I part of the reason why I'm not in much drawdown, nor am I in much profit at all, which I'm actually down to only $21, is that I restarted the whole gearbox this weekend, and so all my ghost trades I think have to be re-ghosting themselves. So I didn't really expect to get a lot of action and a lot of trades closed out this week, just because it's building up the ghost trades in the background. Once that builds up, but I have, let's see, one, two, three. I have 3 pairs that are opened up. I got the let's see, we have
Justin also asked a question. And Al, do you know about this? Is there an Arrow channel or group that concentrates on cryptos only? I don't know if there is one yet.
I don't know. The only place where I know they've done cryptos is they do it a little bit sometimes in the 9 to 10, 12 o'clock session. I think Nathan does a little bit of cryptos in the evening. When he's evening, I'm talking like East Coast time, 2 o'clock in the morning till 5 in the morning, that 3-hour period. I've seen him do some cryptos in there, but I don't have them on my charts because I don't have, the broker that I'm using doesn't trade cryptos yet. So I don't have a feed for the cryptos. I do buy and sell cryptos, but I don't trade them particularly.
And Sandy had a question. So if the dollar's weak, gold should be going up. Is that correct? Your opinion?
Well, you would think so.
Normally that would happen, but there's the difference now is we've definitely got the cryptos flying in. Mm-hmm. So people are putting their money there now.
Yeah. Gold is still what I call the world standard standby and for when things go south. But what's happened before, and happened back in from 2008 to 2012 era, actually 8 to to 2016, I guess you could say, is when the U.S. prints so much money, they do the quantitative easing where they're just pumping money in to keep the markets up. And what happens is that if they keep pumping money to put the markets up, people aren't doing that flight to safety of gold because they're just driving stock. Because if people are doing it, they're putting money into gold, especially when they fear that the markets are going to crash. Well, if they keep pumping money into the markets, all it does is keeps going up and up and up and up. And you keep waiting for the fall, you keep waiting for the pullback. But what it does is that, like I said, don't try and pick a top, don't try and pick a bottom, because it's going to fool you. And we've been hitting new all-time highs, but the only reason we're doing it is because they're pumping money into the markets.
Right. Right.
And because of that, the gold's losing ground because they say, well, we might as well keep it in the market as long as it keeps going up. We might as well keep putting the money in the market. As soon as they start getting some whisper of this thing starting to consolidate and do a major correction, which, I mean, it's been due for a major correction for the last 10 years. So, and it has had a few major days where it chops, but, and if you notice that with gold, like last year in June, July, gold started going up and it made some new highs. Well, that was all within with the consideration of what the election was about, what was happening with the election, and in preparation for that. But it's pulled out from the near the $2,100 level down to the 1750, I think is where it is right about now. I kind of view this as somewhat of a buying opportunity for gold, although I don't know that it's at the bottom or it's going to. I mean, last time it did what it did, it retraced back to about 1500 and stabilized around 1500, and then it bounced around between 1500 and 1100, and then once things started becoming a little bit more uncertain with the dollar and who was going to be elected, it started going back up again and made some new highs.
Can you look at euro yen?
Euro yen. Euro. That should be over this side here. Euro yen.
Yeah, look at it on 15-minute for a second.
Ooh, let's see that. I got some old 15-minute. That's 15-minute right there. Lots of upward. Let me reset my chart here. Template load and put it onto a new day's template here.
So Yoda was saying they like if we can break up above that 15-minute zone. If we break up above that 15-minute zone, yeah, I would like it pretty much long where it's at, but that's my style.
Actually, I like this little pullback right here to the 200 moving average. Everything's still up, came back down, stacking the moving average. We have a zone right here. I would like to see it come in and tag the zone and then maybe take it long which should actually be with the trend.
And then Robin comes up with a good question, because this happens a lot. She said, they said, is it okay to keep a swing trade from yesterday on the euro pound, or not euro yen 1 hour over the weekend? I know you shouldn't keep trades open during the weekend, but does that also count for trades on 1 hour?
Go take it away, Brian. That's your belly wag.
Kind of give me a look at that on a 1 hour for me a second.
Which one? This one on the 1 hour?
One, yeah, same one. Now the question is, are you long or short? I'm assuming you're long since the trend is up.
It would be a long. Right now the trend is up. So
measure. If you're doing a swing trade, you have and you're following the strategy of arrow. That's 100 pip stop, 50 pip target. I'm not exactly sure when you got in. I'm assuming on that bounce.
Here's a bounce arrow.
Yeah. I'm assuming there.
So this could be
measure off 100 pips down for me.
Yeah, let me do this. This one could be an interesting trade here, being for a swing trade, because you have the bouncy arrow. You're with the direction. 100 pips is your your 3 zones below, so you got lots of.
Now swing that up to the 50 mark. That should be right at that resistance level.
Yeah, I think it's going to be. This probably would be a good swing trade.
Yeah, I think
69 pips.
I would leave it alone. You may incur, I don't know what the swap fees are for an over weekend thing. But here's what I look at with swing. Anytime, it doesn't matter what you're doing, swing trade or if you're day trading. If you got into the trade and you are willing to accept the risk, then why would you change it? That would be my my theory on it. If you believed in it yesterday and the picture has not changed, then I personally, of course, this is not financial recommendation or anything like that. I personally have no problem holding trades over a weekend on swing.
I know Brian to have held trades for months at a time.
I'm still holding trades months. I actually have one trade left from last February, right before COVID hit. The picture hasn't changed though. I'm sitting in drawdown with it, but the picture hasn't changed.
How's your swap fee on that one?
What was that?
How's your swap fee on that? Is that a
I'm
positive
earning
swap?
on that one. Yeah, I'm earning on that one.
See, that's the thing with the swap fees is that if you're short, you may pay a swap fee. If you're long, you may get money back. Now
Somewhat. That all depends on the currency interest rate of each pair.
It could be reversed.
You can be a seller and make money too.
But just know that the money that you get is usually less than the money that you would be spending if they charge you a swap fee.
Right.
But you can hold positions for quite a while and just keep on adding to that account every day. They add a few more pennies to your swap fee.
And so, Robin, I would say, yes, if you went into it as a swing trade, then you are willing to take it for 3, 4, 5 days. And that happens if you did it yesterday. That happens to mean holding over the weekend, unless you have a written rule that says I hold no trades over the weekend. And there are traders that I know, swing traders, that do that. I don't. I figure if I got in it, that's why I got in it. So that's what we're doing. And yes, Robin's long. Good. Yeah, I would. Yeah, obviously we can't predict what the future is going to be, Robin. But to me, everything's right. Doesn't mean it won't change over the weekend. You know, governments and businesses can change things over the weekend, but everything is in order still.
The thing I like about this, you have lots of green bars down below. It's bouncing off this 200 moving average.
And that's on the 15-minute chart, though.
This is on the 15-minute, but we have a zone right below you, and we have the crossover of the arrow moving average. We have the 200. They're all moving the right direction. Now you do have the zone right up above. It was going to have to break through that in order to get that 50 pips that we were just talking about. But you have another zone right just above it, and that would be where this would be your target zone. I believe that would be where your 50 pips would be. If you took it from here, up here would be your 50. Yeah, right here's your 50 pips, 60 pips right up there. It would have to break through this, but if you're on a swing trade, when we looked at the 1 hour chart, this zone wasn't here, I don't believe. My memory serves me correctly.
And then can you look at euro pound on the, I'm guessing, a 15-minute chart?
Euro pound.
And how are you wonderful people doing this morning?
Oh, there he is.
We are awake.
Good morning there, Mr. Matt.
Squish it up for me. Get back up and see what we got for trend. I'm guessing it's short.
Pretty much short.
Question in the chat box says Euro pound has tested the 200 moving average. I don't see your 200, so throw that up.
Let me throw it up here.
It's tested the 200 and come back across the moving average. Is a half trade good for strategy 9? I don't know enough about strategy 9.
Strategy 9, I think, is that bank induction move, I believe.
Okay.
We have a bounce arrow go. Is here is where you see should be. Make sure we're on a 15-minute chart. We are. Here's the strong move down. Actually, this is kind of a drawing out W, but here's a strong move down. Here's the first hit. Here's the W. Here's the second hit. We have the trend coming in. So here's your anchor. Let's see. This little green. This little green candle right here has a nice. Be the next. That would be the. Here's the anchor. Here's the first hit. Here's the second. This is the second hit. So that confirms the trend to the upside, which helps to validate this zone right here. Here's the bounce. Here's it came into the zone, bounce, arrow, go. This is all through the money zone last night. This is a good example of what we were talking about earlier, where we had here's the daybreak. So this is where the new day started. You put a line at the bodies of the highest candles before the money zone. You put a line at the bottom, including this candle on the daybreak line. This would include that. So, and if this zone is less than 50 pips, when you hit the money zone and it breaks one of these two lines, the bottom line or the top line, when it breaks that, that's your trade, and you go for 20 pips. Let's see if that one would have worked here. This looks like one of those classic money zone breakouts is what it came up, and it. Now I don't know if you have to close. I just think it needs to. I think I would like to see it close, but then by that time, by the time you get the close, you're already pretty much past it. That's only 5 pips. But from the break to the next zone, let's see, this one may not have qualified, may not have had enough room. It's only 11 pips, so that really would not have qualified until you got to this zone up here. This is a rather narrow range here. We're looking at 11 pip range for the whole money zone. And you have the other thing you look at is look and see where yesterday's zone was, which is right here. If I take this line, move it down to the bottom of the zone from yesterday, take this one, since we move it up to the top of the zone, which is right about in here, I believe. So right now it's trading inside yesterday's range. And again, being a Friday, it's right. It's not even in the middle. It's sort of it's testing the bottom of this trend line. We have another trend line up here. Again, this is one that I'd be more apt to kind of just stay away from today, at least until you get something a little bit more conclusive that it's no. Here's your wedge from yesterday's high to yesterday's low, and right now it made a lower high. Here's a high. Here's the low. Here's a lower high. Here's a higher low. Here's your anchor. Here's your first hit. Here's your next hit. It's coming right back down. This could be a little head fake. This could be a trap where it comes in, because you have it may take this little green zone out, but it's got this whole big one to go through with not a whole lot of pip value to it. So, but if you really wanted to be taking trades, I would not do it. But if you really felt like you had to be taking trades today, you'd want to be buying down here and selling up here, or selling up here and buying down here. But you're putting a lot of, you can't be, if you're going to be trading this type of a range, it's a 20 pip range. If you have a 40 pip stop, but your risk reward is not really there, because now if you can do this with a 5 pip stop, that's a nice little trade. But for the basic bag principle of the bounce arrow go, we need 20 pips target, and we give ourselves a 40 pip stop, and we try not to take the full stop, but that is the wiggle room that you kind of give it. So, but this would be a no trade, even though it had the bounce, the arrow, the go is coming right up into here. You don't have the 20 pip range, so that would void that as a trade.
This would be low probability for sure.
Yeah, I agree.
This is
I wouldn't force. It's Friday.
No, you'd be potentially stuck in a trade, and then you might get gapped out by the market move over the weekend. So,
especially if it's on a 15-minute chart. Now, if you were doing a swing trade, it was a bigger picture, different story.
Right. If you're doing this on an hourly and you want to hold it until next Friday, hey, be my guest. But
yeah, agree. Yoda says confirmed trend change in US 500 seems like a W after some A's in the 15-minute chart.
US 500. Let's pull that one up. Trend change.
Confirmed trend change.
Yeah, confirmed trend change. Let's see. Let me zoom.
You're on the 5-minute chart, by the way.
Which I should be with this.
Oh, he's saying 15.
Oh, okay.
I'm just saying from his perspective. I don't know.
Okay. Yeah. Trend change. Let me see. We have 3 zones on the top.
There's the W he was talking about.
Yeah, it is forming. Here's the W you're talking about. That's a big W.
That's a big W.
That's a big W. Well, let me think. Well, you have the moving average right there. We're not going to worry about those right now. There was a zone right here. Now that's just maybe on the 5-minute. Remember, what I often do is I put these arrows in the direction of the trend right by the zone. So that way, if I pull up a chart and there's no zone there, I know that the zone was taken out, which at some point in time there was. Now, this may have been set on a 5-minute, but let's just see if there's a 5-minute zone here. Oh, there still is. Yep. since this is a chart that we generally look at this one on. But if you look at the 5 minute, we have 4 zones up top. We have 1, 2, 3, 4 zones. It's pretty much equal. And then you're looking at having, if it's Forex, it would be 50 pip spread in between to be able to take trades in both directions when the zones are equal. I'm not sure what the parameters are for the indexes in that regard.
I believe it would be similar, but I don't take trades when the zones are equal anymore. And that's just me personally. I've just found them to be not the greatest setup opportunities.
I would certainly want to see at least the enough for this. If we generally do a $5 target, $10 stop, I would certainly want to see at least $10 move in here. I don't know if there's, that'd be the very least that I would probably, because you're still wanting to get half of it. So it's not 21 to 35. So that's $20. That's a $20. It probably would be enough room to take the trade. I don't have any appetite for it, but for this one right now, especially.
It would definitely have to break that higher high before I would even consider getting in there.
Yeah. Now, one thing I like about this pattern here, where we have our 200 moving average, you can see how that's low, and we had the crossover right here by the zone. Price came down into the zone, came back up, tagged the 200 moving average, came up, closed above the arrow moving average. This would have been a good little move right here to take it to the upside. And that was before this zone was formed. And we saw one earlier today with that same type of setup. I think it was the British something.
I can't remember which one it was.
It was the British Swiss, maybe? Nope, wasn't that one. We saw one that had the 200 moving average. It was right at the zone, had the 200 moving average. And I don't remember seeing where that was.
I cannot remember which one we were talking about.
No, we did the Euro British. Maybe that was it. So this one here came up to this is a little bit almost the same type of thing, only in reverse. We have the 200 moving average coming down. We have the arrow moving average, which is below the 200. We don't have a crossover yet. I mean, here it's like they were starting to consolidate, never crossed, came back down, came back consolidated, came back, tagged the 200 up into the zone, closed below the arrow moving average, and it's all the way down. The problem with this one is it's right here at the zone, and it's coming right into this wedge, basically. So again, you can see it's starting to break through the bottom. I'm looking at this could be very well be a trap. Because I remember we had the anchor, we had the hit, we have the third hit, and it's breaking through the bottom, but it's coming right into, it's got a lot of zones right here. It's going to probably take out the small little green zone, but it's going to have this one. This could be where the trap could be. Now, if we have enough strength to the downside, we would need to have strength on the British pound to the euro. And right now, according to our strength map, they're both pretty close to the same. Nothing real dynamic about that. Although on the lower time frames, let's see here on the lower time frames, the British pound is starting to gain some strength to the euro on the 15-minute chart, which is the time frame which we're looking at. It's gaining some strength on the 30-minute to the euro. The euro's pretty much equal base right here on the 1 hour, and the euro is getting weaker. So basically, this one's starting to confirm that this zone right here may not hold from the strength of the currency strength. And if that's were the case, we do have the arrow, but it's right into the zone. Now the question is, will this zone hold? Will it break out through this range that we determined? Now this was the low of yesterday's low right here, this orange line right here. So if it can break the bottom of yesterday's range, which we knew that's where there was the buyers came in, that's as low as it got yesterday, during the whole money zone era time. You see, this is the bottom. So if this thing can break through this zone, it's going to be breaking through yesterday's low, and then it could go down lower. Now the question is, how low will low go? You have to go to a higher time frame. Euro British. Let me go and put this on a trading view chart.
You just had an alert for the pound yen as well.
Oh, okay. Let's take a look
And then
at that
you
real
also
quick.
at the same, I'm guessing it's the same one because Iris had an alert at the same time. My bet is it's probably tied with this one.
I'm gonna make a note of this one. We'll come back to this one as we see if it comes back through this.
You actually
this
got
zone.
pound yen, euro, pound, either one of the two. One's a buy, one's a sell.
Now let me take a pound. Let's take a look at the pound yen. Pound yen. Here's
From a
this.
structure perspective, it looks really nice.
Again, the pound is getting stronger. The pound's getting stronger to pretty much all. The pound is gaining strength in all 3 time frames. So this could be a good trade actually. If
Broke
it's,
your wedge. And
Yeah.
it broke the wedge. It's
I'll
got
wait
this
for your
zone.
retracement.
I'm going to take this. Let's see, where was this? I'm going to take this Fibonacci off of here.
Yeah, I like the idea of taking that on the retrace there because that's not bad.
Let's see where the next target would be. Right now we're looking at.
But yeah, there is a red zone there, but I don't think that red zone's it's either going to disappear in the next little bit or it's going to reject price real hard. And we could have a nice move to the downside.
I'm not seeing
Actually,
anything up here on this pound yen. Let me see if I can get it on my trading view charts here.
what if this is a head fake?
Well, that's. I'm not sure that it is, but
Okay.
I'm not sure that's not. Pound yen. Let me see if we can do it. Pull it up on my trading view charts and see if we can make some heads or tails out of this. Pound yen we're looking at.
Oh yeah, I made a higher high. Let's see.
Pound yen. Here we go. Let me move this over. There's my trading view charts on this one. Strong move up. Let's just take these off for right now so it doesn't confuse us. I'm going to put this on a. This is a 15-minute chart. You can see we have this little wick right here is where it's testing this. So right now we have a little bit of a zone. This is where, as Matt was saying, this could be a trap. This certainly has potential of being a trap right here. But if it can break through this,
That would mean clear skies.
well, it's
That
going to
would
be clear
mean-
skies up until someplace way over here. So we can go to our 3-hour chart, see if we can find a zone that's, well, that's really right there. It's still, there's nothing way over here. This is back in December. Let's go a little bit deeper.
No, it's out of the chute, man.
Well, I'm on a daily chart. There's still nothing all the way back here by February of last year.
Yeah.
So we have to go to a weekly chart.
Weekly.
There we go. Here's the
2019.
All right, here we go. Here's it's making the 2019, December of 2019 is where the high has been. Now we have this here, and this is a good example of what I'm talking about oftentimes. Now remember we're talking a weekly chart. This was the high that it was at. It's just coming up to. It could very well come up and retest that wick. If it can break through that wick, if you look over here, all you see is a wall. You don't see any wicks. Like if you're down here, you see a wick. You have to come up to the next wick. This is the whole down move on this week. On this one week, this red candle this week, it just saw nothing but red all the way down. So this was where the sellers took control way back in March of 2019, and where the body of that candle, where this candle stops, that would be the next target once this week gets closed above. Now the fact that it's a weekly chart, there's probably, if you look at these price action in this little zone right here between, let's just take it from the top of this to the top of this candle to the body. If you look at the price action in that into a lower time frame, you'll see there's a lot of action going on in that week, but that was the range it was in during some period of time of that. So this would be the zone that once it breaks, I would expect it to maybe come up here, but up here is where all the sellers came back in way back in December, drove it all the way down, and it hasn't been back to that level yet. This may be one of those trades that Brian's in that he's been in for 2 years.
Yeah.
For a year as a swing trade.
One of those.
But you can see though that this here's your dive. Here's your dive. This thing could go apart. I mean, once it breaks through this area, it could very well. No, right now you've got a flat top here. You got a hit. You've got a hit. You've got a hit. I mean, all this area right in here is where the sellers took control into this zone. So it's coming right up. I mean, the fact that we've got some momentum to the British against the yen. But again, we're on a Friday here, so I mean, there's a little bit of room there, but I don't know if there's enough room to take a trade.
Oh, that's an interesting. That's interesting because it looked like it just went, and everyone probably had their stop at that level, and it just poked above because they didn't think it was going to keep on going.
Right. Yeah, because they were looking.
I think this is what's going on right now. Because
you see, here's a high, and if you look, here's a high, here's a low, here's a lower. So here's the market maker's fake out right here. They drove the price up, came back down, picked up the market makers, say, hey, come on up here. There's some sellers up here. Market makers come up, they drive it back down. They go, oh, I think we have a few more. Let's see if we can take some of these stops out. So they drive it back up, take out this level here, and now they're going to start selling it again.
They'll force the sell.
They'll force the sell.
Which will cause your stops to be taken out on the way down, which momentum down again. Yeah.
But here's the start. Here's your, if you look and see where the trend lines are on this, this is just good technical analysis on a higher time frame. Here's your high. Here's your left shoulder of your M. Here's the middle of here's the second shoulder. Here's your M. But this was just kind of like your fake out. It came in, it flatlined. It came up, and see, we're still on we're on a 15-minute chart here. So really, we have a little flat one up here.
I saw a lot of fake outs in there, Al.
A lot of fake outs in here.
A lot of head fakes.
It down. Came up here, brought it down. Now, actually, it could very well keep on going up to retest this. Now that they've been building up their long positions down in here. Nice move up, building the long position. Here's your rally. Here's your base. Here's your rally. If we put a fib on this thing, which I would oftentimes do.
38.2. What's that? 38.2?
It might be. This might be the big. I say this thing's going to keep on going up. So right here's the pullback. Here's your
minute 5 resistance just disappeared on the pound yen.
This is just disappeared. Okay, this is going to keep going up. I think this thing's going to keep going up. Still,
that wick's going to fake people out.
Yep. I think right now, with the fact it's got a 38% retracement, the next target is going to be up here somewhere around. I would put the target right up here where this yellow, where this dot line is. Right.
You know what? I'm going to use a small lot size. I'm going to go for a swing trade. I'm going to go crazy. just a small lot size. When that thing pulls back.
Oh, shoot. Here's my target zone right here. This would be my target off of this Fibonacci move. This would be the target right up in here, right between the 100 and right between the 1-to-1 and the 78% extension off of this Fibonacci. So this would be my target.
Mark, we'll get to your question here in a second. I promise.
Yeah, we'll go and scan GU.
So where I read that one. So anyway, that's the technical analysis of this one. A lot of pressure on the upside coming up here, and right now I'm not seeing anything to say otherwise on this.
So your RCS is not showing your pairs on the right side either. The name.
Oh, the RCS.
Yeah,
I just have that turned off. Is all. I know what the colors are. In order to turn it on, you basically you can turn those things on by put your settings, and it goes to, let's see, I think appearance maybe. I could remember which one it. Oh, indicator name labels. Here you go.
Okay.
I think this would be it
Scales.
right here. You turn that on, and then it pops in right here.
There you go. Yeah.
I just know the colors of the different pairs, so I don't. That way, I don't. When you pop that up, you get all the others come along with it.
Yeah.
And that's are closed by. So I just know what the colors are. And I mean, basically I know what the main ones are, and what this does, it puts this RCS tool puts it just the pairs that you're looking at, it puts it on the bottom down here. So now I'm just looking at just the British rather than looking at all 8 of them like I was over here. I'm looking at all 8. What this does just puts the pairs of the chart on the bottom, so you can see how they compare with each other.
Hey, Al, what was
Yes.
your target on this trade for the short term? Was it be 148.20? Is where you think it's going to bounce?
Yeah, I'm looking right around 148. If it can break through this area right here. Now it needs to close above this.
Yeah.
But if it goes above that, and again, it's Friday, so you may get a little pop up here. It may
consolidate, whatever.
It may consolidate, but I would say this would be the ultimate target up here, about 148.20 area. And if I look at my fib tool, let's see if I have a higher time frame fib tool up here.
Because I have a stick that I drew, and it hits 148.20 to the pip.
Okay, well that would make sense.
So
and
that's
let me put this on a 4-hour chart. See if there's where the zones are daily.
And my bet is the picture that Yoda brought up, the pound Swiss is probably similar.
Yeah.
To this, I would guess.
Let's see, pound Swiss. Pound Swiss, here we go. Yeah, probably pretty much. That's good. We had to go all the way to the weekly chart to find it. Yep, pretty much. So this sort of speaks a little bit to where the strength of the pound. There's a nice
2,700.
Yep. Look at this. I mean, I'm looking at a weekly chart now, and we're just talking technical analysis while we're waiting for trades here. If you look, here's a strong weekly drop. And remember I mentioned oftentimes we'll talk about a wick over wick. This is the wick over wick right here. And it's on a weekly chart. So the week it dropped, came back down. The next week opened up, and this was a little zone. We had a down wick, came back up, opened up the next week, wicked up, came back down, and then fell down. Look where this thing came and stopped.
Hesitated. Yep.
It hesitated right there. Here's
what was
a rally.
Once resistance becomes demand.
Yes. And so now it came up, hesitated because of this little area right here. And now it's coming up. And if you look at this whole thing, you see absolutely no wicks at all in this. So right here, you're looking at, this is the next target. This is the next significant target zone is at the body, right below where that last wick was. This was the origin. And you probably have another little zone right here. Let me clone this. Right
I can promise you just below that is also another zone, just barely below.
And if we just look at the price action right now, remember, this is a 1-week candle. This is all the way back in March of last year. Let me go back to March of
COVID.
Yeah, COVID right there.
Yeah, this is a COVID. This is COVID.
That's your COVID candles.
Absolutely. So February 24th. So let's go back to a 15-minute chart. And let's go back to February. So where's my go-to? Here we go. I think this is the go-to. Go to 20th, February 24th, I think it was, we said. 24th. Let's just go back to there. And we're going to go. And so here's where we were looking at February. That's August. May not go back that far.
Yeah, I don't think you can on a 15-minute chart.
Let me go back to 1-hour chart.
Now you have to do your go-to.
Well, here's February 21st. Yeah, I got to do the go-to again. February 20. Okay, the go-to. There we go. There we go. Boom. So right here is where, and you can see, here's the price action during that, where it dropped out. Remember how we declared this as being our zone. Here's where the price action before it fell down. So when it come all the way over here, you can see this is where it really left, right in this area. You can see how that works when you just look at those wicks and the body. This was the body of that 1-week candle. This was the top of the wick of that candle. And this is all the price action on a 1-hour chart. You can see it for 1, 2, 3, 4, 5, 6. Probably be about, how many hours was that? We
12.
had a hour from here to So for 21 hours, it lasted in that zone, and then it just broke out and never came back again until it's trying to do it as we speak.
COVID recovery.
The covert recovery. This is a covert recovery. That's right. But you can see how, like we said, price has memory, and it will come back again and again and again. So we know that this is where the battle between the buyers and sellers lasted for 21 hours before the sellers finally took over. Now the buyers are coming up and say, well, I think maybe we'll try this front again. So there's a lot of, so there's, from
It's
this
the same
trade,
thing with the pound yen.
from a swing trade, you're looking at, we have a possibility of 126 pips on this, 134 pips just to the bottom of that zone. And you could probably maybe take it into the middle of it for 150 pips from where it is right now as a swing trade, but it's not going to happen overnight. You're going to be looking at for probably days. You'll be looking at that for days.
Even at that 45-degree angle, it's going to take you days.
Especially since you're going back to a weekly candle. I mean, it could actually be a month. God knows what's going to happen with the economic situation in the British world.
We don't know what's going to happen by Monday, let alone what's going to happen by the end of the summertime.
Yeah, that's a good one.
But really, that's how you can make these assessments. Like I said, when we look at these targets, know where your next target's going to be, and it could very well be, a year, 2 years away. But obviously, the price is starting to come up, and like I said, price has memory, and it does eventually get back up there again, and maybe make new highs. And actually, that area wasn't actually the high. There was some other higher highs beyond that March 2019 timeframe. So come back here to the 15-minute chart, and back to our business at hand. See, it's 8:30.
This is why I like Fridays. Fridays, you don't normally get as many signals, but you can dig in.
You get a chance to really get into the technicals a little bit.
If you really like
deeper.
digging in, Fridays are great for that.
Yeah. Like I said, I've reached my weekly targets on my manual trading this week, so I'm not in any big hurry to take any trades today.
I just put a small position. I like to set up. I don't do a lot of swing trading, but this thing looks pretty good for a swing trade. So I
agree.
I'm gonna hold it on. Yeah, Brian's got me kind of converted. I'm starting to really love the 1 hour time frames for Arrow. Really starting to love it.
It's interesting because many times it's a lower stress level for sure. Less emotion on an hour chart than you will have on a 15. I think it incrementally gets less and less the longer you go because your expectation is not immediate.
Yep, yeah. Absolutely.
It just takes much more patience, but also takes a lot of the emotion out of it if you don't look at it every day.
Right.
Well, you don't have to look at it because you know that you already got your stop losses set. You already have your trade setup is done. And the high probability of the systems that we're using, there's really not much of a concern on that end, right?
Yeah. And the other thing too is with the swing trades, it has less effect. The news has less effect on it.
Significantly less.
You have ebb and flows. And of course, I do a Monday night session too with manual long-term stuff, but you can see where you would expect, just like Al's kind of broken this down, you can see where if you're in a long swing trade, where you can expect to have a little hesitation and slow down. And if you already know it's coming, then it takes the pressure off because you already know it's coming. So when I get into a swing trade, I already have marked off where I believe it's going to hesitate on its way to target. And when it does, I don't freak out and go, should I move my stop? Should I do this? All those things that you get caught in your head with, I don't have to do them because I already know using some other tools that I use that I expect it to hesitate. I don't expect a straight shot up. If it happens, great. When you get parabolics on your favor, that's good. When you get parabolics against you, not good. But normal ebb and flow is about a 45-degree angle. And if you were to take his chart on the pound yen, and I guess that would be a couple of days ago, you could draw a median line right down the middle. And you would see that, okay, yeah, we have a lot of ups and downs, but there's still a 45-degree angle in place.
You know, so look at the money zones for the last couple of days. They're all still pretty much
They're
hanging.
under. Yeah.
They're all still hanging inside this range right here. From here's the peak to the bottom of this was the low, but this one was kind of engulfing. Now the price was engulfing, not so much the money zone, but even the money zone was actually a little bit lower than. But you can just see where the money zones are, where the highs and the lows were, and now this is where it broke out of this area, broke out, came back, retested, and now it's taking off again.
Squish, can you go to an hour on this again?
Yeah, because I'm already up 10 pips there, guys.
Now, here's what I was talking about, guys. That would be February 15th. I get it out. I guess you could take February 15th, that little pivot. It's a rally down lower, a little bit higher, not quite that far. A little bit over to the right and straight up. Go straight up. There, right. Right there in the money zone. In the money zone above you.
This one here. This one.
The one to your left.
The one to my left.
No, well, you just passed it. Do you not see the money zone?
This one right here. Yeah.
No, the one to your right.
this
right
one right
there.
Here.
Right there. Go to the top of that one. That money zone. Yeah. So if you put your yellow line dead center there, if you were to draw a horizontal or a trend line, a median line from that point to where price currently took off from, you would have a 45-degree angle. That tells you the overall ebb and flow of a swing trade. So you
like
got
from this line to here?
No, right where your yellow line was at the top of that one. Yeah, take it from there to the rally-based rally that just happened.
The rally
that just happened.
Here's this one here.
The one that's the last candle, right before the last candle was made.
So actually, here's a 45. I'm just sure if I'm understanding what you're trying to say here.
I'm looking for a median. I'm not looking for a trend line. I'm looking for a median. So if you put your measuring tool on that pivot high on that first one that we saw,
this one right
to your left, there you go, and you draw it to the last candle where it started.
Where
it just blew up from.
This one here.
All the way to your right.
No. To your right, to your current candle.
Current time.
Where it started.
This one right here. That
one. Where it started.
Higher.
A little higher?
Current candle. Yep. There you go.
Oh, right there.
Boom. 45-degree angle. Now, knowing that as a swing trader, I can expect ebb and flow around that, and it doesn't bother me. It doesn't make me go, oh, I got to get out because I may not make this win. Go all the way up, not a trend line. There you go, right there. Just a median line. And what that does is it gives me, it also plays in with a moving average. It's a nice trend. If it's truly a trend, you're going to have 45 to 55-degree angle. And he's going to put channels on it. He's basically channeling the top, and he can channel the bottom. I mean, that's what you would end up doing. What does that call a pitchfork?
Kind of like a pitchfork. I was just about to say.
Actually,
I don't know
pitchforks are basically nothing more than channels.
Yeah, I don't know anything about pitchforks, but I also look when I'm looking long term, is my 45-degree angle being when I have some deviation from it, and you're going to have overshoots and deviations from it, is it still within the picture of a long-term trade? I don't do this on 15-minute charts.
Huh.
Just me.
Look at that secret sauce that's being laid out here. That's good.
This gives me the confidence to stay in for months.
Okay.
If I have to. I don't want to. There was times.
Yeah, and your accuracy on those are really high.
Yeah. And I would expect, my natural inclination would be, I would expect some resistance at the blue top line. I'm not going to take profit immediately. I'm going to see, is it going to break down below the bottom? Because if it comes all the way down and breaks down to below the bottom, that's a big picture change. But I don't do it normally on a 1 hour chart. Usually I'm doing it on a 4 hour chart for me. 6 hour, 4 hour chart.
But I'm trying some pitchfork magic. Give me a little bit.
I don't know what that is.
And you can see how the prices sort of hung around the top half of the median, came down, hung around the bottom half, and now it's going back up to hang around the top half again.
Yeah. And so you use those little pictures. That's why when I talk on Monday nights with my session, has the picture changed? If you're a swing trader or a position holder trader, don't get out until the picture changes. I actually have my stop 600 pips away. And the reason being is it keeps me from getting too happy with my stop. And as soon as the picture doesn't change, I go, oh, I got to stop because I may take profit. it keeps me far enough away where the broker won't stop me out, number one. And number two, where I have to manually understand the picture and I have to get out. Now, my 600 pip stop, my normal stop loss is actually around 60 when it's all said and done. So
which is still less than the 100,
which is still, yeah. And my targets, my initial targets are always about, and it all depends on the pairs because each pair acts a little bit different. This is a pound yen. I would be looking for about an 80 to 90 pip move on a pound yen pair. And that's my first target. And then at that point, I usually will have a second and third target further up.
Brian.
Yeah.
I need to share my screen, show you what I just did.
Yeah, just tell Al, because I'm not sharing mine.
Absolutely have to.
I don't want to.
Oh, well, too bad. Too bad.
Sharing.
No, I want you to notice something, okay? So I did my swing. I have a swing high to swing low.
And you're doing this on a 15.
On a 15. And I took my the tail end of the pitchfork, I guess call it the shaft, moved it up and down, found a nice bounce here. Okay, where is this median line going?
Exactly.
Where's this median line going? What the heck?
So that would be the same place I would take a re-entry position.
It's exactly the same spot.
You can see it broke out. You see it broke out of the top of that wedge.
Yep, and that's my target on the wedge. And that's why I asked you if 148.20 was your target. Right now, we are in 12 pips of profit.
Yeah, I'm long swing, 50 pips target on the pound yen currently.
Oh, your 50 pip target?
Yep.
Okay. Well, you know what? That might be...
But a 15-minute chart, you're only going for the 20.
Yeah, no, I know. I was going for 40, actually.
Yeah, I've actually...
Because of my target. I got in down here.
Yeah, I took the swing trade on it, so I will go with the standard. I can move it if I want to. I just don't see any resistance that I need to, so I'm going to hold on to it for a bit. So I see
nothing. I see nothing but clear skies all the way through.
But notice where he started his handle of what you call a pitchfork.
Yeah,
is the same spot I was telling Al to find.
And I've drawn thousands of these. No, we're not expecting it to reverse, Gavin.
Not for a while.
Not on a higher time frame perspective. There will be consolidation. Once it reaches the length of the stick or before that, it's going to consolidate. And we might be in consolidation over the weekend and then a gap up at market open.
I'm gonna see something real quick on my end.
For the sake of this, because I'm using this more as a swing trade strategy, I actually have a big fat stop loss for me. It's going to be at the bottom of this wedge. So that's going to be like...
I put mine at 100. Just let it be for me. Again, I followed the general understanding. I know. When are you expecting it? We can't really predict that, Garvin.
We don't know.
What's a reversal? Is that a full range downtrend or is that just a pullback?
Right. What time frame are you talking about?
Yeah, you have to.
I
was trying to answer your question. I was like, how in the heck is that on my screen? I don't know who that person is.
No, you're fine. So I expect it to consolidate here. I don't see a reversal. A reversal means like a complete change in trend. On the 15-minute, what happened? Here, I'm going to clear this just to give you an idea of what I'm looking at. And remove drawings. All right. So myself, I like to use 5/1362 exponential moving average as one of the major indicators that the trend has reversed. Right now, that's the green and red zone that you see here. Once it's green, it means that we're going up. Once it's red, it means we're going down. So we're up. Here's your correction. And then we're back up here. And then we have another correction. Actually, if you just want to, you can probably see the wedge here already. You actually got quite a few wedges in here. You got this bigger one. And then you got this one here too. And this one is actually very tradable. Hold on. And then you see, you draw your stick. and then you're out here, that's where you kind
That's
of
where
started to get
Shimmer's
your
target
first pullback, right? If you did your other stick, which officially would be somewhere here, just doing it by eye, then you would put it at the breakout, and that would be your target, which is,
We were saying 148.20, I think is what we were saying.
yeah, 148.20. So we're almost at the same spot as if we drew this wedge here, which is the one that I drew as soon as I saw the chart. Hold on a second. We're going to go down just a little bit lower to the origination of that whole swing, and then we put this one here. So there's this wedge here. This could be like a TP2 because that's a bigger stick. I actually like going from somewhere in the middle of the wedge. And this would be
there,
TP1.
Matt, where's your target at on this?
My highest target that I have
Yep.
is 148.27.
Okay, you're fine.
And I drew it out at 148.20 is where the wicks were on that way
I'm
back.
saying we're going to have
This is my higher probability target right here. That's where like I'll put my money where my mouth is, because I have two sticks that are telling me that it's going to hit this little box here.
And you're doing a 15-minute. I'm going to show. Let me see.
Yeah, I'm going to stop sharing, but this is where I see it coming.
Let's see if I can squish this up a bit
at the intersection of this. So let me stop sharing.
Okay, I'm going to share out real quick until we get a.
We got Euro 8. Yoda has a question around Euro AUD, so you can do that. I'm going to go check that.
Yeah, check that one out. Let me share here. A little bit of extra nugget. This is my actual FXCM chart. This is my FXCM chart. Now, what you're seeing, guys, is I don't normally come down to the 1 hour chart. I normally do a 4 hour. But when we just jumped in, we just cleared a 200 moving average on the whole moving average, which is why I jumped in. Now, this is what I teach on Monday nights as well. But let me just jump to 4 hour because I like the 4 hour better. I want you to notice this little area right here. This rally right at the blue line. Now, people don't know what the blue line is. Those are actual fib numbers. So what I do is instead of having a fib retracement from a random high, random low, these are standard across all yen pairs. So on a yen pair, 145.44 on a 4 hour chart will always be blue, which means strong support. So let me give you some confirmation on Arrow. When Arrow came out and they showed me, I went, whoa. I've already been doing this. Now, I use speculative sentiment as well. So majority of the traders currently in the pound yen are short. And tell me why? I have no idea. Because when we look at this, there is no reason for them to be short. So I always go with my indicator here that tells me where sentiment is at. So if all of them, a majority of traders are short, then I want to be going long. But my eye has been trained over the last 8 years to places like this. I could say this area right here. And I would almost bet there's something right here as far as resistance at some point. If there's not, that means we got clear selling all the way to 76.93. Now, I just jumped in, so I'm in it. What I also do is I like to take these standard numbers and give me a playground. I told you I have a reason why I expect resistance, because I found that when I pulled this fib down from line to line, a good place to go long would be where? Right here at the 23. Where do I expect hesitation? At the 50, at the 61. Where did it come back to? The 38. Where did we stop at? 61. Now I would say we may hesitate a little bit here. So that's why I'm not worried about if we have a pullback. My full pullback would be down here. So I also have this other tool that I use, and this is why it got me excited about Arrow, because it looked a lot like what I already used, and it was similar already. This is a tool that I used based on some other education that was developed for us. And this is going to identify areas of supply and demand. It looks a lot like, or support and resistance, however you want to call it, looks a lot like Arrow. not quite the same, but I want you to notice where my circles were before I ever knew what was here. These dark green areas are what we call fresh areas that has not been revisited yet. Gray means it's already been tested. So this would be like an arrow zone. So why do I expect hesitation? Because we've got price action prior to and historical that has not been to 148.20 yet. Matt, what was your target?
I'm
148.20?
already. I went to EA.
4807,
give me a sec.
14807, 14807, I think is what
I
it
think
was.
he said 148.27 something.
I had a couple.
Yeah, 27 and 07 were both the two.
And so right here, where was my target? I'm thinking we're going to go all the way up to here, if not further. However, if I'm going to be a long-term swing trader, then I'm going to anticipate and already expect that even if I get in here, it's going to wobble around for a while and let everything catch up. That's what I would be doing as a long term. So it's very, very similar to Arrow. I love the fact that it's that close. And I have other things that I use to confirm when I get in. Like when we jumped in right now, we jumped in because we had this basing here and it's got momentum. It's pointing up at a 60-degree angle. And we can come back and do our analysis and get our 45-degree trend on it if we wanted to. But when we jump down to a 15, I'll leave that on there. I'll still have my 4-hour fibs on there. But when we look at that 14 or that 50-minute chart, what does it look like? Well, there's the big zone. It looks huge on here that, oh, we're going to have this big area of resistance, and we could. But look where we have, I told you guys we could possibly re-enter. Look at the number, 147.75. That's a quarter number. Yens like that. And so if you miss this on the way up, there's nothing saying that you can't get in at 147.75 for a swing trade. You really can't. Or even lower, 147.50 is not a bad area. So, but that's how I do things. So, Al, it's all yours. I'm going to stop.
Yeah, there's a question, and Yoda had a question about the red zone on the British yen in the daily time frame.
On my chart?
No, well, I've got. Well, we can do it on yours. I can do it on mine. I've got mine.
You got Arrow. Let me stop sharing. Let's show Arrow.
Let's see.
And then I'll do the after Al does that one. I'll do the Euro AUD. I've got 2 targets for him.
The crashing of it.
Yeah.
So this is the red zone I believe you was talking about. This is on a daily chart now for the say British yen, and that's a pretty thick zone. And this is, again, we're on a Friday, so right now, would I expect this thing to break through this today? No, not even a little bit. I don't think. Do I think it could be for the long term? Yeah, but it's not going to be a direct shot. If you look and see where the zone was formed, what the price action looked back where it was formed, which is way back over here. I mean, you can see here's a hit, here's a hit, here's a hit, came back down, hit again, came back down, hit again. So this thing has been a pretty solid zone for all the way back to, where was it here? Probably May of 2018. It was a pretty solid zone all the way back. But you can see where this thing was formed. And that's what's nice about this arrow is it shows you where these zones are way back when. And they're there until they're broken. But you see, like, it was penetrated, came back down, hit it again, came back down, hit it again, came back down, hit it again. So I would expect that it's going to come back up and probably be rejected again. But here again, you're looking at 149 on a daily chart. You're looking at the top of the zone is at the price of 150. Well, Matt was talking about 148.27, I guess is it. Let's just say about 148.20 area right in here. Again, this is where this one was hit. This one was penetrated. So it's the zone's getting weaker, and it's actually getting a little bit stronger because each time it comes up, it makes it a little bit lower high. Getting back, here's a high, lower high, lower high. Now this one is starting to take off, and
it's the key.
It's starting to make a little bit higher highs. So that's the key right there. Is that how's it really looking when it comes to what it looked like way back over here? This is now at a higher high than this. Here's where this, if I can get to pull this down here. Here's where the last high was. It actually is making a new high. And I think if you're looking at it right now, I think it closed. Well, I'm not sure it closed it at it. Let me see here.
What time frame are you on? You haven't closed today yet. We
haven't closed today. No, because we're looking at daily time frame, daily chart. But even like the past hour, you can see that it came up, it's pounding away at it, but it can't seem to, even like in this hour time frame, in another 5 minutes, this candle is going to close, and it wasn't able to close above this line right here. So this price is still, the sellers are still coming in. When it comes up to that price, the sellers are still coming in.
Hey, Al, I know we're running up against the clock. Can you answer Mark's question? I don't want. He's been waiting
Around variable, yeah, we can't forget that one. And then I can quickly go over EA.
What was the question? What was the question? I missed.
His question is, if you were again, no financial advice, but or recommendations. He says, if you were in 25% drawdown on variable on the pound US, would you extend the number of levels currently at 12, close at a loss, or wait it out?
Pound US? You said,
Pound US on
pound
variable.
US, on variable. Ooh.
If you were on 25% drawdown, would you extend the number of levels, which is currently 12, close it at a loss, or wait it out? It sounds like one of those.
I need to get my.
What's that game show?
Oh, Who Wants to Be a Millionaire?
That's one of them. But the dating game.
Oh yeah, phone a friend.
Contestant number 1. Would you add levels, close at a loss, or wait it out?
Okay.
It's better than to tell the truth, I guess.
Oh boy, let's see what. Well, right now, let's see where it's at right now as far as where.
I'm assuming he is short.
We're gonna make that. I'll make that assumption as well.
Because if he's in 25% drawdown, that would have to be.
Let me put a 4-hour.
Yeah, that's a good assumption there, Brian. That's using your brain.
Mark said, "Yep, short."
Because if you're long, you're not in 25% drawdown. Come on now.
Well, right now here's a blue zone right there. So that's one point of the matter. Let's see where we can. Well, we have to find out where the next price level is going to be.
Well, I would know first and foremost, Mark, if you're starting to get that antsy feeling, then when we start recalibrating your variable, you might want to lower your drawdown percentage. I know mine's set to 50%. I'm okay with that. Some people aren't. They just let it sit at this default, and they're not. They never think it's going to get there. But you have to prepare and plan as if it would get there. And could you accept that 50% drawdown?
Yeah,
I can. It's not a big deal for me, but I don't know your current situation.
Don't
be scared though.
We're looking here all the way April of 2018. This is where we're right at a blue zone. Here's a green. So this is the overshoot area, but it's coming. We got this area right in here that we're looking at.
So the question again, posed to Al Mittman. Again, this is not financial advice or recommendations of any sort. The question to you, Al, is if you were in 25% drawdown, would you extend the number of levels, which are currently 12?
You're already at 12 levels. You're already at 12 levels.
That's what the question is. Yes, I'm giving you the question right now. This is your answer, your chance. Currently at 12, would you extend those, close it out for a loss, or wait it out?
All I can say is I'm glad I'm not in this short.
That's not the answer he's looking for right now.
Come on, Al.
I would be tempted to, the way I oftentimes handle situations like that. I'm usually okay with 30, 50% drawdown. I would probably hold off on. I would not close it out. I don't think I'd close it out.
There's one answer gone. Now you got two choices now.
The other choice, I would not close it out, and then there'd be one of two choices. Is one, I would put a hedge on it. If you're able to hedge it, if you're on an international broker, you can put a hedge on it, which means that you can take the opposite position. As long as this thing is going up, you could stabilize your margin, your free margin, by taking an opposite position. So if let's just say, for example, you're at a 0.05, well, you're at 12 levels. So you're probably at 0.12 or something like that. Let's just say you're at a 0.12 on a sell. What I may do is put like a 0.06 on a buy. That would help to free up some of your free margin. If you're starting to get to where your margin is getting to be where they're going to start, you're worrying about them closing your trades out because you're reaching a margin call, then you can do one of two things. You can take an opposite position if you're on an international broker. If you're on a U.S. broker, you can't do it. But I would take maybe half your total lot sizes and put it in an opposite position, and just that would stabilize it. And then if it comes back up, then I take that position off, and then wait and see if you can find out where this, because you're going to be looking at a possible target zone of this thing could very easily go on up. It's going to do one of two things. It's either going to pass this blue line right here, pass it, close above, and keep on going to the green one as an overshoot of this whole move, or it's going to hit this blue line and it's going to be rejected and come back, recheck it again, and then go short. So you're looking at something like this, in my opinion. And so this, again, this is not financial advice. This is just that you have this blue line here. So if it comes up and closes above, comes back, closes, rechecks the blue line, then we're looking at probably going up like this. That'd be scenario one. The other scenario is it comes back, passes the blue line, comes back, doesn't close above it, comes back, rechecks the blue line, and then it comes down and it
now you have a turn.
Then you get then it heads on back down again. So you're right at a very critical point. This is a major, it's a major institutional level right here. If you can get the close above, and being a Friday, I would probably be apt. I would not be willing to close it out right here because I would be more apt to say, if I get the close above and it does this little move, then I take that, put that long on, do like maybe a buy stop, maybe a little bit above here. If it comes up, put up in a wick. If you get a wick on today's candle, if you get a wick above, I would put a buy stop above that wick. That way, if it does come back and do one of these numbers where it comes back, retest the line, and then goes further short, you have a buy stop that doesn't get triggered. If the buy stop gets triggered, it's probably heading on up to this one, and that would help to stabilize your position. And then I'd be looking maybe taking that buy off up here and do the same thing. Then if it goes up to this one, same thing. If it passes the green zone, comes back up, passes, checks it, and keeps on going. It could go up even higher, or if it comes back, passes, checks it, and come back down to recheck the zone, pass, check, rejects it, pass, check, holds it, and then you get the.
We just need that parabolic move to stop for you.
And then it comes back down this way, yeah. But right now it's going straight up. Usually when it goes straight up, but here are the zones you look at. When you come over here, you're not seeing a whole lot of, you're not seeing any wicks in this area.
One right there.
But you see, this is where the prices reject. You see, it's right at that blue line, right where it is right now. It's right at the blue line. So I would not close it out. I wouldn't add to the position short. I would not let it take any more short positions until you start seeing it come back, and then maybe allow it to take another position. But right now, if you're 12 levels into it, I would just let it stop taking positions until you get that more confirmation of a reversal.
All right. Hey, no problem.
That was a huge explanation. I was wondering how long.
But the long and short of it, is it's right here at the 140.28 level. The next level is 142.15. This is on these are daily institutional levels or 1 hour institutional levels.
Aren't you on a weekly? And you got the fib on a daily?
And these levels are basically, they are, this is 100, these two levels. Now let me just show you something else here. Inside these levels, and this is kind of important. So we'll extend our time a little bit, where we can go over a little bit. Here's the blue line. So here's a 1 hour, let's see, 1 hour blue. Where are we at here? 15-minute blue. We're just gonna see. I'm on a weekly chart. Let me get back to a daily chart or something a little closer.
And the fact that your daily and your weekly are both blue. Now, guys, when I showed you my screen and I showed you the red, blue, green, this is the same tool that we use.
These are the same levels. So right now, we're going to call this is right where it's at right here. Let me expand this out here. Here's a blue zone. Here's a green zone. These are all 1 hour zones. They're labeled differently, but that's what they are. In between these zones, if I go to the next lower time frame, if I go down to the 15-minute, you're going to see that I've got 3 zones.
Which is exactly
blue,
like
green.
Yeah.
So basically, each one of these major zones get divided into thirds. So if it breaks this, it's probably going to bounce off of that. And so that kind of lowers your risk levels a little bit, or your target levels a little bit. That's a 50 pip. If I go to and you can break these down into thirds as well. And if you break them down into thirds, you're going to find out that these things like to swing in about 21 pip ranges. That's one reason why we're using 20 pip targets a lot of times, or because the Forex likes to move in 7 pip increments, 7, 14, 21. So if you break this zone down into a third, here's a green zone. Let's see, here's a 15, there's a 1 hour green. Oh, that's showing up. Let's see if I can do this again here. Doesn't like this time frame for some reason. Let's try it again. Huh. Why is it not? And we're going to 15-minute green, I'll call it here. And we have the blue. And if I go to the next lower time frame, you can break it. So you're going to break this thing down into another 5 minute. And again, we have it into thirds. So just get these zones and break them into thirds, and those are where your bounces are going to be. But you can see, like right now, you can see how it's being rejected off this level here. That's why I said I would not be real anxious to take this to close it out, because one thing you don't want to do is close it out right at the very peak before it turns around and starts getting back in your direction. I would not allow it to take any more shorts until you get more of a confirmation that it's actually going to break down. But I would not close it out just yet. That's what that'd be and I'd be more apt to put a hedge on it before I'd close it out at this point. Most of the time, variable. One thing I've noticed with variable and gearbox and Alexander or Einstein, if you give it enough room and give it enough time, it will work its way out. But
natural ebb and flow of the market.
But sometimes you're going to take some heat in the process. The question is if you can stand the heat in the oven.
Agree.
And that's all I can say about that.
Which tools are you using on trading? Those are tools that are proprietary. We'll talk. We're trying to work a way where we can get those tools to you guys. So just be patient with us.
I'm going to try and talk to the developer today about that and see what we can do with it.
Yeah.
Okay.
All right.
And that's pretty much
a Euro Aussie. Matt, did you have something on that before we roll?
Yes, matter of fact, I do. So Euro Aussie.
Stop sharing.
Yeah, let's share that real quick. Hold on.
Then we'll
screen.
Call it a day. Good group for us for a Friday. Hanging in.
Yeah, Friday was good. Some people are really confused in the group chat. They said they're like, yeah, there's no arrow call on Fridays. I'm like, guys, Hawkeye has been supporting Arrow for the last month and a half officially.
Yeah.
So just because it's not a per se arrow call.
Yeah, we're a technical analysis group. It could be anything Auvoria Prime has out that we have access to, this, especially manual trading type stuff. Susan wants us to be teaching traders, not just the arrow, but understanding why we take a trade, any trade.
Right. Absolutely.
We do use arrow as our baseline. But we're sometimes and not all the time, but sometimes, especially when things are slow, like especially on Fridays when things are really slow, we'll dive into the technicals of why things work out better, or where targets are, the whys of why it's showing what it's showing, and not just the. It just gives people a little bit more reason to know where to take the trade, where not to take it, where the targets are. It just dives into a little bit more of a micro level.
We're not here to talk about trade management in that regard as well.
And it's just and all I can say is I appreciate everybody's patience. I know sometimes it gets to be a little bit overwhelming, but just give yourself a break. Don't get on yourself and say, I don't understand this, because if you're here long enough and you start hearing the terminology, you start seeing what we're doing, it will all start making sense. But right now it's like taking a drink of water out of a fire hose.
That's exactly what I was thinking.
It's a lot of information very quickly, but you have to give yourself give yourself a break, give yourself the opportunity, and allow yourself the opportunity to just sit back and just observe. Eventually you'll pick up more and more and more, and it will start making sense. and you'll get so much more out of your trading if you allow yourself to do that. It does take a little bit, but it's not something that comes out overnight. It takes a little bit of time, but it's not something that you can't absorb and handle.
Take it, Matt.
Go ahead, take
All
it, Matt,
right.
and then we'll close this.
Yeah,
up.
I was trying to respond to Gord or whatnot. He's saying we don't have a call that supports Arrow this morning, and well, I don't know what I'm doing right now then.
Yeah,
Anyway.
there just aren't any Arrow alerts to speak.
Yeah, there wasn't. I mean,
All right, let's talk about this. Okay, this is your world famous pitchfork. We've drawn it on the 8-hour chart because that I drew this pitchfork over here. This has been on my chart since January 18th. I adjusted it a little bit, just a hair. I see it coming down and tagging this point, so I've got 2 points. So I've got this line here, which is somewhere around the point of 1.5300, and then I've got another target here, 1.5173, somewhere on this line.
Is that it?
That's all.
I was waiting for more. I wasn't sure if you're done talking or not.
No, that's all. He just wanted to know where I saw it going, and that's where I see it going.
I think it's going down.
Yeah, it's like going down. Yeah, that's a good assessment there.
And you can look at most of the Aussie pairs. Most of the Aussie pairs are going parabolic right now. So Aussie's extremely strong. So keep the other pair in mind. It's not necessarily Euro weakness as much in this case, probably as Aussie strength.
Before we leave, I'd like to ask a question, have everybody put something in the chat box. Give me a 1 if you're finding out this information is being helpful and informative. Give me a 2 if you're finding out to be a little bit overwhelming. I'd like if everybody at least put something in there so I get a feel.
I even put a 1 in there.
Oh.
Okay, and again, for those who seem to feel it's a little bit overwhelming, again, give yourself a break. Give yourself don't get overwhelmed with it, because like I said, the more you're in this room and listening, the more the stuff will make sense. And ask questions. Feel free to ask questions. We don't mind going over these things because we do have a lot of new people coming in, and it is a little bit overwhelming at times. But please ask the questions, and we'll try to explain it. And sometimes we can say the same thing in 2 different ways, and do it from education in general. People learn differently, and people understand things differently. So we try to present things in different manners so that people with different learning techniques can understand it when they may not understand it the first time. So don't be afraid to ask the questions. We're here to help everybody to understand and learn. Primarily, this is a room for trading the Arrow. When we don't get the alerts, then we, rather than just sit here doing nothing, we try to at least make some use of our time to add to the educational levels of what we're doing.
Right. So here, one last thing. So I put a stick here on my wedge, and that's my target.
Yep. Ebb and flow.
So 1.5213 is the target as per the gentleman's question. And I hope everyone has a most fantastic day.
Yeah, thank you for your responses. I appreciate that. It gives us a little bit of feedback about where we're at. And as our job is to make this room worth your time as well as our time to present it to you. So if we're not hitting that mark, then we need to know what we need to do differently. So thanks again for your inputs. Everybody have a great weekend. Be safe, stay warm, and we'll see everybody on Monday.
Y'all be good. I've enjoyed this week. Thank you, guys.
All right. Take care, friends. Have an awesome weekend.